7:40, 20 minutes moving up to 8 o'clock on our first up this rainy Tuesday morning. In studio we have our friends from the Unit Trust, Mr. Ryan Brown, who is the Client Relationship Manager. We'll be joined in a short while by Portfolio Manager Justin Silva. Good morning, Ryan. Thank you for joining us this morning.
Good morning.
We're talking about investing globally today. How does one invest globally?
Well, basically what we try to do at the Unit Trust Corporation is provide mutual funds available to our clients that are basically across the international exposure of different regions, different sectors. We have a wider range of international suite of funds. A North American fund that's predominantly the U.S., North America, Canada. We have a Latin American fund, so it's across the globe basically. So we have provided that to our unit holders as opportunities to invest globally. All right, Justin has joined us and said, Justin, you're the portfolio manager. The first thing I hear when I think of investing globally is have to be very rich. That's the first thing I think of. You know, I'm accustomed to my little money market fund, yes. But I say global investor. Am I Donald Trump or something? Is that an accurate perception?
Well, that's not true, Paul. The Unit Trust, we offer a wide range of vehicles for the investor, whether you're from the beginner, the amateur, or just don't have that bigger pocket, to the sophisticated investor or the person like Donald Trump. But we offer a wide range of vehicles that could allow any investor, whether you have a low-risk appetite or even a higher-risk appetite, to invest globally. Let me just throw out some examples for you. Like, for example, the investor who may not have, you know, the millions of dollars to invest, or may not have the high-risk appetite. If you want international exposure, we offer vehicles like the Growth and Income Fund and the Universal Retirement Fund. These funds offer the investor both the luxury of having domestic exposure as well as having international exposure. So what you immediately have there is a very easy vehicle for you to be diversified on a global scale.
And you're weaned on gently.
Huh?
you're introduced to it gently.
Yes, correct. You know, so if you have a low to moderate risk appetite, I would definitely recommend those funds. If you are more sophisticated and you have a higher risk appetite, I would definitely suggest you look at our international suite of funds.
And a more solid base.
Yes. Well, not necessarily. Maybe Ryan can
to add to what Justin mentioned also, we at the FAWM, myself and Omar included, what we'll normally do, we'll run some tests with you and you get an idea of your risk appetite and we'll recommend necessary funds.
What type of test? Let's explore risk appetite, because that seems to be a very common theme, especially with new investors. How adventurous are you? How much you're willing to go on the limb a bit, right. And especially based on your own personal circumstance.
Well, when we talk about risk appetite, is if you can take, like if you look at the stock market and one day it drops, for argument's sake, 300 points. If you panic and you're willing to take all the money out of it, you cannot deal with that type of ups and downs, then some stocks and some sectors aren't necessarily what you would like to invest in. So that's what we look at basically. So is this just going to have a base idea of, you know, what you're willing to invest in based on your risk.
In terms, yes, Justin.
Also, I just wanted to mention, you know, you also have to look at the person's circumstances as well, because the risk appetite is not only about how much you would like to risk, but you also have to take your realistic circumstances into consideration, in circumspect, such as your age, you know, your current income,
how many paychecks you have left
to retire. Correct. Exactly. You know, which are important things when you would like to consider or determine your own risk appetite, because I mean the average person may want to, like, yes, you know, I want to win big and I want to go to Las Vegas, you know, I mean, but these things have a lot of risk, because you could go and spend a lot of money and you come out with nothing and you just lose everything.
Well, that's why the UTC always tells you to diversify. Of course. So while you may go out on a limb with some investments which are not in of themselves bad investments, but understand the market is volatile.
Yes.
And there's some that will provide more of a risk cover for you.
And that's why you have to diversify, not only by security. For example, in the local market, you will invest in your different bank stocks and your different conglomerate stocks. But we also recommend that you diversify by market, because you have to remember that one stock market will not always be up. There may at times that it will be down, but if you diversify by stock markets, you will also have the opportunity to spread your risk. So if our local market is down, the U.S. market might help you out. If the U.S. market is down, the local market will help you out.
Is that necessarily for an advanced investor when you now start to spread your wings? out through different markets, the Hong Kong Exchange, the London Exchange, the New York Stock Exchange, and our local Trinidad Tobago Stock Exchange?
I would not say it's only for the advanced, because as I mentioned before, there are vehicles which we provide like the Growth and Income Fund, like the Universal Retirement Fund, which give you not only the diversification by the domestic market and the international stock markets, but it also gives you that component of fixed income, which could provide you with a lot of capital stability. So it reduces your potential for downside, and it actually increases your potential for income and capital appreciation.
To give our viewers an example of what the opportunities would have been in the past 12 months, let's just tell, if people invested globally, how could they have benefited if they started to move beyond our shores in terms of international investments?
Basically, what we normally look at, we look at the S&P 500 in the U.S., and that particular index is up roughly 15.7% year to date. So had that person been invested in the market, fully invested in the market at the beginning of the year, they would be up. That's got capital appreciation.
15%?
Yes, 15%. In Japan, for example, the Nikkei, that is up roughly 30%, which is, astronomical returns in such a short period of time. So that's where we will look at things locally. I think right now locally the market is actually up roughly 7%. So, as Justin mentioned, not all markets will operate the same way. So that diversification is necessary along certain lines.
When we see now, we're hearing the percentages starts to bring it home to would-be investors. You're seeing 7% locally, 15% in the Nikkei average, and
S&P.
And the S&P, sorry. And those types of attractive prospects, how do we balance that with still understanding that it's important to invest, although ours is just 7% in the local stock market?
That's a very good question, Paul. And because, yes, these things look very attractive, we don't want our investors to run out there, which is why we'll always say, first, one, identify your risk appetite. Two, be prepared to diversify, because we don't want you to put all your eggs in one basket. Because the Nikkei is up 30% year to date, approximately, you start to understand the risk that goes up with that market. That's a very volatile market, so it could go up maybe 5% one day, it could be down 5% another day. So you would also want to spread that risk, or hedge that risk, as we would say, or mitigate that risk, sorry, by having some of your cash in probably a market that is not so volatile. You might want to look at our local market, which is not such a volatile market, or the S&P 500, which is a little more liquid, a little more manageable, and these can actually help hedge your risk. A mutual fund, just like the unit trust, is also like the unit trust range of mutual funds, are very good ways for people with small, not big spending ability to diversify their small amount of funds throughout all these funds without taking all that volatility. So we are prepared to basically manage that risk for you.
Most people looking on also, especially, and we're talking primarily to the new investors looking on us saying, should I also become, because you guys are the experts, very accurate with world happenings, should I go to do my research on the Asian markets, on the New York Stock Exchange, because they can be very frightening sometimes. You hear the constant business news on CNN and BBC about rises and falls in the daily trading. How much do those daily events affect my investment?
Well, psychologically, it will impact you. That's just natural human nature.
But should I really be panicking, or is it that they stabilize after some time, so it's not cause for that much worry?
They tend to stabilize at some point in time, and that's why we're here, at the Unit Trust Corporation. If you have any issues with anything else going on in the international market, you could always give us a call, and we can easily basically walk everything through for you to understand what economic indicators can impact and how it's going to impact certain stocks, certain sectors, certain regions. So, discussion is always necessary. It's not very prudent to sit and make your own. Some may just make their own decisions, but it's always wise to get a different professional advice exactly from for ourselves.
So people who have been trained in this area.
Correct. You know, it's important to speak to the professionals as well, because while we do recommend that the investor, keeps himself abreast of international news and events, he has to remember that, his source of news might be from a media company whose job is to sell news. So there's a lot of, over-exaggeration with respect to what may happen. Correct.
Yes, thank you for slamming the media.
No,
but I understand because we understand that they get their airtime sold by making it sound exciting.
Yes,
so it's sometimes over-dramatized.
Yes, correct. So they kind of take away from the hard data. So which is important to look at the hard data and the hard facts. So it's important to speak up with a professional who could probably draw their attention to what's important at the point in time.
What are the opportunities now for the rest of the year? What have the trends been in terms of where people should be looking locally, in terms of the companies that are doing well locally, and also the international possibilities?
Well, right now, market timing is something that we always consider. So, as we mentioned before, there are the regions that are, stock markets have gone up tremendously. There are also some regions that they have lagged behind. So. We could consider those as an opportunity because, we don't necessarily want to fight a trend. If the trend is going up, it tends to go that way. So some regions in particular which are downtrodden a bit, will come across an opportunity. In addition, we could look at, cyclical stocks also, where you have certain sectors are underperforming, the S&P 500. That's also opportunities.
I'm glad you said how important is trending sectors, technology, energy, etc. Justin.
Oh, sure.
Looking at specific companies also, like Apple stock always comes up. First Citizen in Trinidad and Tobago.
Oh, that's a very good question. Well, actually, let me just continue on the international part, and then I'll just jump back to the domestic. With respect to the international markets, yes, we are seeing a lot of value there in the international markets. However, there's this theme. The major theme right now in the international markets is continued stimulus by the world central banks. There's a lot of speculation with respect to the exiting of central banks, exiting their stimulus programs, and this has created a lot of volatility in the markets as of last week. So
because they provide support.
Yeah.
Yes.
So what we would do at that point in time, what volatility causes or creates is the opportunities to enter cheaply, because you have all of a sudden you have one day it's down, and then you can
and then
enter
you jump
cheaply,
into that point and it goes back up.
Correct. But these are, of course, as Ryan said, timing is very critical, which is why we would say leave it up to the professionals. Come to the unit trust. We could help you manage your funds, your money through our mutual funds.
And the First Citizens, how important is to jump in at this point?
Oh wow, well. First Citizens Bank, very strong brand. The IPO has created a lot of excitement in the market. There's a buzz about it. This weekend, I believe there was a special with respect to where they provided more details as to their IPO. It's 20% divestment that they're coming out with, which is roughly 50 million shares. And I think it's going to be is good for the market. But what I would recommend to any investor before they invest in First Citizens is appraise the risk of the bank first. Because First Citizens is, yes, it's one of the major banks in the country.
And
but
stable.
And stable.
And a great brand.
Great brand, strong balance sheet. However, when you look at behind the balance sheet and what business they are in, they're not like RBL or Scotia, who are heavily retail. First Citizens has a very strong corporate banking and merchant banking business. They have quite a bit of exposure to construction, credit risk. So they are of a different risk model, I would say, compared to the other banks. If you are okay with that type of risk, then by all means read the prospectus, look at the financials, read the offering. What are the dividends that they're going to be offering you? What was the potential for capital growth?
Track and get proper
and if you're fine with that, then...
And of course, more information, ttutc.com or org.
Yes. Look us up on Facebook, ttutc.com, and even Twitter.
All right, Justin and Ryan, thanks for being with us this morning.
Not a problem.
Of course, you can get more information by going online, ttutc.com. We're going to stand by now to take you to Jonathan Chase, who's at the Diplomatic Center, for our continuous updates on the visit of U.S. Vice President Joe Biden Jr.